We could be on the verge of the greatest crypto wealth transfer in history. Some analysts are looking at a market where Bitcoin could blow past its old all-time highs. But here's the tough truth. The vast majority of new investors, full of hope, are going to get left behind. They'll get wiped out chasing hype coins and risky bets sold to them as a golden ticket. Meanwhile, a small group of investors will likely build life-changing wealth. Their secret? They understand that in the long run, real-world utility is the only thing that matters. They aren't gambling. They're investing in the foundational pillars of the new digital economy. In this video, we're cutting through the noise. We're going to break down 5 foundational altcoins built for real, sustainable growth, not a quick, speculative pump. This is your guide to investing like the smart money and positioning yourself on the right side of the coming wealth transfer. Let's be real, the crypto market is showing signs of a major bull run. We're seeing spot ETFs getting approved, opening the floodgates for more investment. Major financial institutions are signaling their interest, and some forecasts suggest the total crypto market cap could grow significantly from its 2025 valuation of over $2.4 trillion. But this incoming wave of money creates a trap for beginners. The market is flooded with noise about the next Dogecoin killer or some obscure meme coin promising to make you a millionaire. These are designed to trigger your fear of missing out, your FOMO, and push you into emotional decisions. So how do you separate the real signal from the noise? The answer is simple. Focus on real-world utility. For every asset you consider, ask, what problem does this actually solve? During the dot-com bubble, investors who threw money at any company with a .com in its name got burned. But those who focused on companies building the actual infrastructure of the internet, the Ciscos, the Intels, the Microsofts, built generational wealth. That's the same opportunity we have in crypto today. The projects that will thrive are the ones providing indispensable services. This video is your framework for identifying those pillars. The 5 altcoins we're about to discuss are foundational investments in the critical infrastructure of Web3. Before we dive in, a critical disclaimer. This is not financial advice. Crypto investments are inherently high risk. You should never invest more than you're prepared to lose. This video is purely for education, to give you the tools to do your own research. All right, let's get into the first foundational altcoin. First on our list is an absolute titan, a project so fundamental it's often called essential infrastructure for the crypto world. We're talking about Chainlink, ticker symbol LINK. The core problem it solves, the utility blockchains by design, are secure but isolated networks. They can't access data from the outside world like a stock price, the weather, or an interest rate. This is the Oracle problem. A smart contract, code that runs when conditions are met, is basically blind and deaf to the real world. Chainlink solves this. It's a decentralized Oracle network that securely connects blockchains to real-world data, events, and payments. Think of it as the bridge that lets the isolated world of crypto talk to the vast, data-rich off-chain world. Without this, most useful smart contracts would be impossible. It does this securely by using a network of independent nodes that fetch and validate data from multiple sources. They are financially incentivized to be honest by staking link tokens, which they can lose for providing bad data. The proof, evidence, and bullish factors. Chainlink's dominance is staggering. The value of on-chain assets that rely on its oracles, known as total value secured, blew past $100 billion in September 2025, doubling in just 1 year. The real story is its push into traditional finance, TradFi. Chainlink has been part of groundbreaking collaborations with huge financial institutions. A test in May 2025 saw JP Morgan use Chainlink's infrastructure to help settle a cross-chain transaction of tokenized funds. It has also been working with giants like Swift, the network connecting over 11,000 banks, to help them interact with blockchains through Chainlink's cross-chain interoperability protocol, CCIP. This integration is scheduled for a production rollout in November 2025. When the plumbing of the global financial system integrates a piece of crypto tech, you should pay attention. The beginner angle and risk assessment. Chainlink is a foundational hold because it's a bet on the growth of the entire crypto ecosystem. It's chain agnostic, serving dozens of different blockchains. As more apps are created, the demand for secure data only grows. Investing in Link is like investing in the data provider for the whole digital economy, a picks and shovels play. The main risk is competition. However, Chainlink has a massive network effect. The more projects that use it, the more secure it becomes, creating a powerful moat. Its deep integration and institutional partnerships make it one of the most fundamentally sound long-term investments in the space. Next, we have the project that's all about speed, scale, and low costs. We're talking about Solana, ticker SOL. The core problem it solves, the utility. Crypto has long faced the blockchain trilemma, where you can only pick two of three features: decentralization, security, or scalability. Early chains chose decentralization and security, but that meant they were slow and expensive. For crypto to go mainstream, this scalability problem must be solved. Solana was built to do just that. Its mission is to be a global scale blockchain that can support apps with billions of users. It uses a unique consensus mechanism called proof of history, which timestamps transactions to process them in parallel at incredible speeds. The result? Solana can handle tens of thousands of transactions per second for fees that are fractions of a penny. The proof, evidence, and bullish factors. Solana's proof is in its performance and user growth. In early 2025, the network saw over 2.2 million daily active wallets. As of late November 2025, it maintains a strong user base of around 2.2 million daily active users, with a total value locked in its DeFi ecosystem between $8.8 billion and $11 billion. The most significant bullish factor is a massive tech upgrade called FireDancer. Developed by Jump Crypto, FireDancer is a new independent validator client. This is a huge deal because it introduces client diversity, making the network far more resilient and reducing the risk of outages that have hurt Solana's reputation in the past. Second, FireDancer is built for hyper-performance. Early tests have shown it could process over 1 million transactions per second, a monumental leap that would put Solana on par with traditional systems like Visa. The rollout is expected through 2025. The beginner angle and risk assessment. For a beginner, Solana is an investment in the high-performance future of Web3. If you believe blockchain needs to support apps with millions of users, you need exposure to a platform built for that scale. Its low fees and fast transactions offer a much more accessible user experience. The main risk has been network stability. The FireDancer upgrade is designed to fix this, but the transition carries technical risk. Solana also faces intense competition from Ethereum and its Layer 2s. However, with its massive user base and the game-changing potential of FireDancer, Solana has solidified its place as a blue-chip asset. Hey, just a quick pause. If you're finding this analysis valuable, make sure you subscribe to our free newsletter where we share more timely insights. The link is at the top of the description below. Now let's get to our next coin. Our third project is a fascinating giant focused on a different prize, enterprise adoption. It's not even a blockchain. We're talking about Hedera, ticker HBAR, which runs on a technology called the hash graph. The core problem it solves, the utility. For global enterprises to adopt public ledgers, they need insane speed, ironclad security, and stable low fees, things most blockchains struggle with. Most importantly, they need a governance model they can trust. Hedera was built for this. It uses a hash graph consensus mechanism that is highly efficient, allowing for fast, low-cost transactions, perfect for high-volume uses like IoT data or supply chain tracking. However, Hedera's most unique feature is its governance. The network is overseen by the Hedera Governing Council, a group of up to 39 world-leading organizations, including giants like Google, IBM, Boeing, and Deutsche Telekom. This corporate governance model provides a level of stability and credibility that is unmatched. The proof, evidence and bullish factors. Hedera's enterprise-focused strategy is paying off. Network activity shows steady growth, with daily transactions in Q1 2025 averaging over 708,500, up 25% from the previous quarter. The use cases are concrete. Hedera has a major partnership to digitize carbon credits and is seeing adoption in finance with stablecoins for cross-border remittances. In a massive vote of confidence, Hedera was even named the ledger for a sovereign AI solution being developed with tech giants like NVIDIA and Accenture. Seeing names like Google, IBM, and NVIDIA actively building on and governing a network signals immense institutional validation. The beginner angle and risk assessment. Hedera is an investment in the integration of distributed ledger technology into the global economy. The HBR token is the fuel for the network, used for transaction fees and security, so its value is tied to real-world utility. The governance by a council of world-renowned companies provides a huge layer of trust. The primary risk is its trade-off on decentralization. The hash graph algorithm is patented, and the council is a more centralized form of governance. This is a deliberate design choice to achieve performance and stability that enterprises demand. The investment thesis is that for mass enterprise adoption, this trade-off is necessary. Our fourth project doesn't aim to kill Ethereum, it aims to make Ethereum better. This is the king of Ethereum scaling, Polygon, which is transitioning its token from Matic to Pol. The core problem it solves, the utility, Ethereum is slow and expensive. During peak demand, high fees are a massive barrier for everyday users. Polygon solves this. It's a layer 2 scaling solution, a separate blockchain that runs alongside Ethereum, processing transactions quickly and cheaply. Think of it as an express lane for Ethereum. It inherits Ethereum's security while providing the scale and low costs that Ethereum itself can't. Now, with its Polygon 2.0 vision, it's becoming an entire ecosystem for scaling Ethereum, allowing developers to launch custom chains and positioning Polygon as a foundational framework for an interconnected internet of value. The proof, evidence, and bullish factors. Polygon's adoption is undeniable, especially with mainstream brands. Nike launched its virtual goods platform on Polygon. Starbucks built its loyalty program on Polygon. Reddit minted millions of its avatars on Polygon. These companies chose Polygon for its scale and low costs. Anchored to Ethereum's security, it's also a powerhouse for payments, with giants like Stripe and Revolut using its infrastructure. The upgrade to the Pol token is a major bullish catalyst. Pol is designed as a hyper-productive token, allowing holders to stake it and help validate multiple chains within the Polygon ecosystem, earning rewards from all of them and enhancing the token's utility. The beginner angle and risk assessment. For a new investor, Polygon is a straightforward value proposition, an investment in the growth and scalability of Ethereum. As long as Ethereum is the hub of Web3, scaling solutions will be critical, and Polygon is the clear market leader. The partnerships with household names like Nike and Starbucks provide real-world validation that's easy to understand. The main risk is competition. The layer 2 space is crowded with rivals like Arbitrum and Optimism. However, Polygon's first-mover advantage, massive ecosystem, and deep corporate partnerships give it a powerful edge. Our final coin represents a different philosophy. It prioritizes methodical, peer-reviewed research and provable security above all else. This is the tortoise in a world of hares. We're talking about Cardano, ticker ADA. The core problem it solves, the utility. In the rush to build faster blockchains, many projects took a move fast and break things approach, leading to hacks and failures. Cardano's creators believe that to build a global financial operating system, you can't take shortcuts. The problem Cardano solves is the need for a highly secure and sustainable blockchain built on scientific rigor. Every major development goes through formal peer-reviewed research before implementation. This slow, deliberate approach is designed to create a provably secure foundation, minimizing the risk of catastrophic failures. The proof, evidence, and bullish factors. Cardano's proof lies in the steady growth of its highly decentralized ecosystem with thousands of independent stake pool operators securing the network. Its total value locked, while smaller than some rivals, is growing steadily. The most significant bullish factor is its long-awaited scaling solution, Hydra. Named after the mythical creature, Hedera is a layer 2 solution that enables off-chain Hedera heads, private mini ledgers for near-instant low-fee transactions. This technology has shown immense throughput in tests, with some achieving thousands of TPS and others showing peaks of over 1 million TPS in a gaming context. The release of Hedera v 1.0.0 is a major turning point, giving developers tools to build high-speed apps on Cardano's secure foundation. The beginner angle and risk assessment. Cardano represents an investment in security, decentralization, and long-term vision. It's the slow and steady wins the race contender. If you're a patient investor wary of hype, Cardano's research-first philosophy is appealing. An investment in ADA is a bet that the market will ultimately reward projects that prioritized getting it right over getting it done fast. The primary risk is its slow development speed. Upgrades take longer than for competitors, leading some to label it a ghost chain in the past, though growing activity challenges that. The risk is that faster-moving competitors could capture market share before Cardano fully matures. You have to believe that security and correctness will ultimately triumph over pure speed. So there you have it, 5 foundational pillars of the decentralized future. Chainlink, the data oracle; Solana, the high-performance blockchain; Hedera, the enterprise ledger; Polygon, the Ethereum scaler; and Cardano, the secure foundation. Building a solid portfolio starts with understanding the role each asset plays. If you want to continue learning how to think like a strategic investor instead of a gambler, hit that subscribe button and turn on notifications. And let me know in the comments which of these projects you're most excited about and why.